Good day to one and all. This is Dr. Sivaraman of inoindices.com. Welcome back to that of the Asian Session Live Market Analysis and the Forecast webinar. Today we are on 20th of February. Between 5 and 5:30 GMT, I will try to explain to you the session-wise forecast for this week, 20th to 24th of February. And also the levels in which the currencies are expected to swing during this week. Besides, we'll also do the market reading in the four majors and two commodity pairs in order to understand what sort of moves the players are expected to make from time to time. Besides, I'll also explain to you briefly about that of the trading strategy we could use by giving a trade call. My contact details are given here for those of you who are interested to get further information. Can contact me through email dr@i-noindices.com, or if you wish to chat with me using Skype, then inoindices@hotmail.com. In the website www.i-noindices.com, you come across further explanations with regard to my trading system. So basically, in my trading system, there are three components, namely the derived forecast, the market reading, and the live market analysis. Using the live market code page as a single tool for our trading understanding. We don't look into that of the charts or any of the fundamental analysis. We only take into consideration the time of the release of such fundamental data in order to understand what sort of moves the players are expected to make. Then the trading strategy, because after doing all the studies, in the event if the market goes against us, we should not become distressed or panic. Instead, we should be able to trade and earn during either way moves of the market. Because when the market goes up, somebody is making money. When the market comes down, some other person is making money. Only thing is, predominant of the traders hold long when the market drops or hold short when the market goes up. That is why you come across the panic condition and the market surprise, market fear, etc. happening. So we need to understand, address that particular issue so that we will be able to limit the uncertainty. As a result, we will be able to get more certain ideas about how the players are expected to make the moves in the market from time to time. Because the players are here to make money from that of the traders and also the institutions. So obviously, such traders need to read the intentions of the players from time to time. Only then they will avoid getting trapped. The only way is to understand the way in which the players are making the moves, either USD weakening or the USD strengthening move from time to time, or mixed move or the contrarian move. Then accordingly, commit positions. Thereby we'll be able to make definite profit. It is not that we try to trade along with it of the players. It might appear that we are doing counter trade. It is not so. The players gain the levels in the market and book profit with regard to their buy positions. Drop the market and buy when the traders are selling in distress. So it is buy low and sell high trades they do, but unfortunately they misguide us through that of the technical analyst and fundamental analyst that you buy high and sell low. So you have to obviously understand that we should not become victim of such act. Now the forecast part of it. This is the derived forecast using a sequential statistical analysis called as algorithm, with which I am in a position to give you how exactly the players are expected to make the moves in the market. As long as they are human, they are also influenced by emotions. As a result, they are expected to make the moves in the market. And these moves will be predominantly against that of the traders. To start with, they might make the moves in tandem with that of the traders' expectations and suddenly reverse the market, and thereby the traders get trapped vulnerably. So if you understand the type of moves along with that of the time frame they are going to use it for such moves, then we know that definitely during the day how they are going to make an upward or a downward move from time to time. Then accordingly we can plan our trades. And if they are expected to make a dip and the rise, then during the dip we can take a buy and book profit during the rise before that of 7:30 GMT. Then again, they are expected to make a swing and slide. When they are making a small rise around 8 to 8:30 GMT, we can take a sell and book profit during that of the slide between 12:30 to 14 GMT. Then again, for 14:30, they are expected to make a lower level swing and then rise up to 21:30 GMT. Then we can take a buy during that of the dip and then book profit during that of the rise. This way, session-wise trades will be able to plan and do it. So plan accordingly and still use the market reading to fine-tune the forecast that I have explained it during my Tracking the Forex Market Together webinar. So if you follow that, you should be in a position to identify the type of moves the players are making from time to time, then accordingly take positions. Always keep in mind the quick moves or false moves in the market. So if you could carefully understand that, then there will not be any ambiguity while entering into the trade, and that will happen to be a successful trade. Now today they are expected to make a dip and rise during the Japanese session and then swing and slide during that of the European session and swing and rise during that of the US session. So you could come across the week beginning false move today during that of the early part of the Japanese session and also during the late Japanese session, European session. Then afterwards they are expected to make the swing and rise. And tomorrow, 21st of February, they are expected to make the swing and slide during that of the European session and then a very quick rise during that of the European session, US session. So watch for such quick move, and during the drop you buy and book profit during that of the quick rise. There could be a spike happening during that time. Then 22nd, they could make further quick rise in the market during that of the Japanese session and then continue to firm up and rise. And after doing that, after gaining the level, they are expected to make some profit booking move. Swing and slide during that of the Japanese session on Thursday, then firm up and rise during that of the European and US sessions. Similarly, on Friday, they are expected to gain the level and book profit. Then continue to gain the level and book profit towards close. That sort of moves they are expected to make, but still they are expected to gain the levels during this particular week. This is the third week of February. The trending move is on the upside. They are expected to do both in the case of numerator as well as the denominator currencies alternatively. So they will gain the levels in the case of denominator currencies like USD and USD hold them and gain the levels in the case of Euro and GBP and also Australian dollar. That way we'll come across the contrarian move. You can see it now here. So all the currencies, the four majors, are showing positive net change. So Euro and GBP are showing USD weakening move. That is USDN and USD are doing the USD gaining move. This sort of moves they do it, which is referred as a contrarian move. Then in the case of commodity pairs like USD CAD and Australian dollar, they are showing the USD weakening move. Aussie is gaining the level and USD CAD is dipping. So that is again the USD weakening move. They are doing it in the market. So understand that they will handle the majors when the volume is good, and they will handle the crosses during the mid sessions when the volume comes down nominally. So try to follow the session-wise forecast for your better understanding. And during the live market condition, if you observe the respective sessions, you'll be able to really appreciate how the forecast is really helping you a lot to get rid of the uncertainty. And next week, we'll come across the month end and the new month beginning time. A week wherein the month of February gets over and the month of March starts. So during that time, we'll come across from 27th of February to 3rd of March, the market is expected to show very volatile moves because the players will try to handle the derivative market. They will make some extreme moves in the market using volatile conditions. As a result, you will find the options on the futures market will make extreme moves. As a result, the players will try to earn as much as possible and induce the traders to build the positions wrongly during the early part of the next month. Then later on, by month end, they make opposite move and trap such traders who have taken the sell position the lowest level, thinking that the market might come down, but later on, by end of the month, they trap them vulnerably by making aggressive gain in the market. This is what you come across during the monthly trend reversal times. Now, the levels in which the currencies are expected to swing during this particular week is being shown. Euro could swing from the 1.06 to 1.10 level, and currently it has formed a very nominal lower level consolidation. And in the case of GBP, it could swing from 1.2428 to 1.29 level, and it has formed the low as 1.2408 and holding it around 1.241921, and they are likely to breach the high and go above slowly during the day. But they will make swings, but they are all mainly to misguide the traders on the downside. Then in the case of USD&, 113 could be the low. They are just consolidating around that with a brief downward stop into 112.80 during start of the session. And then slowly they are expected to gain. Then in the case of CHF, 99.50 could be the low and 91.50 could be the, 1.0150 could be the high. They formed the low and the high in the intermediary level. Afterwards, they are expected to make a dip when euro is making a rise and then continue to gain the level in the case of CHF also, USD CHF also, when euro is gaining. This they do it as a contrarian move in order to gain the levels in the case of euro CHF cross. Then USD CAD 1.3085, they could come down a little more, and 1.3125 could be the high. They formed so far the high as 1.3108, and they could make the slide after making a brief upward stop. Then in the case of Australian dollar, 76.50 would be the low, and they formed so far the low 76.60, and afterwards they are expected to gain the levels. So in all, you will come across the dip and the gain moves are expected to happen alternatively or simultaneously when the players are making the USD weakening as well as contrarian moves. Now we'll come to that of the market reading. I noted down the initial lows and the highs around 3:30 GMT and trying to find out now it's 5:15 GMT what they have done in the market. The case of euro, they are not breached the low or the high, and GBP also they are not breached the low or the high. Yen also they are not breached They have breached the high in the case of yen. 113.19 is the high. The initial high was 113.15, but they just made an upward move and then come below that of the initial high, indicating that they will make uh, either way swings in order to hit the stops either way and then subsequently gain the level. In the case of CHF, 1.0012 is the low, 40 is the high, they are not reached the low of the high. Then Canadian dollar, 3085 is the low, 3108 is the high, they are not reached the low of the high. Then 7660 is the low in the case of Australian dollar, 7678 is the high, they are not reached the low of the high. So excepting USD yen, nowhere they have breached the low or the high. It could be a low volume condition because it is a holiday in US as well as Canada. So the volume might come down, and in anticipation of that, the players might make subdued moves in the market. So if you got any doubt and any question about the currencies or about my trading system, you can ask in the question answer window. I'll be willing to answer to those questions. Now the trade call for the day, when euro is making a dip closer to that of the low, we can take a buy. They are not expected to make a big drop. And in the case of GBP also near that of the low, we can take a buy and keep about 70 pips limit order and 30-35 pips hedge order to limit the risk. And similarly, in the case of yen, when they are making a downward dip in order to hit the stops and then go up, you can try to take a buy, watch and take buy position near that of 113. Either it can be 112.90 or 85 or 113 itself, and wait for the market to go up and then keep stop at entry and use the trailing stop in profit making position so that we'll be able to really make decisive profit. There is any question you can ask me. Then these are all the session timings. So during the early and the late sessions, they handle the majors. During the mid sessions, they handle the crosses. And during the gap time, they handle specific pairs, making false moves. If there is any doubt, kindly ask me so that I'll explain to you. I'm just showing the forecast page again. So they could make the gain slide today, a little bit of slide and gain, and tomorrow again little bit of slide and quick gain, and Wednesday could make aggressive gain, then make further gains and hold high and book profit on Thursday, and then they will try to make the slide and book profit against, buyback against their sells. Then they are expected to continue to gain the levels during the following week also. After some volatile moves during the month and time, they are expected to gain aggressively the levels in the month of March also. So the levels in which they are expected to make the swings in the market is being shown here. And these are all the trade calls for the day. You can wait for the market to go up and book profit. And because of the holiday, the market might show some subdued moves. So aim for some optimal profit and book it. Since there is no question coming forward, so I'll try to wind up the webinar. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. Also, thank you for your patient listening and understanding of the market. Try to follow the forecast and try to use the trading strategy. Thereby, you will be able to reduce or eliminate your market fear and the uncertainty that will help you to build your capital. So focus on that rather than talking too much or getting deviated with regard to the various type of analysis. So wish you all the best in your trades. See you on Friday. I'll come and do the review part of the forecast, what I given it, so that you will be able to understand the dependability of the forecast. Wish you all the best in your trades. See you on Friday.